not a good look for our profession.
How in the name of common sense did this ever get this far? Vaccines are not seek and destroy missions.
Because he was so severe.
This is nuts.
One of the top 20 things that she has discovered with her research company, Progenobiome, medicine has been corrupted. Where we go from here now, I don't know. Well, it doesn't work.
So angry, punishable with jail time.
Literally, this makes me believe we live in the Matrix.
Like, deadliest year in U.S. history.
It wasn't a question of if, but when.
First red.
If it doesn't work and it's safe, put it in a little Fauci Pez dispenser, give it to the patient, and shut the family up.
It's going to get worse and worse and worse.
Gave Fauci an award for being a hero of the pandemic.
This has been a problem.
These were lies.
Let's talk about the healthcare professionals supporting this.
In the meantime, what was going on behind the scenes?
Irony of the whole thing is,
Harvey's 100% correct.
This is freaking annoying.
ultimately, we need to have hope for America.
What is going on here? What has poisoned your mind? Buckle up, kids. Doctors change lives every day, but what happens when life changes yours? A single injury, a sudden illness. Your career, your income, your future can shift in an instant. The best physicians don't just plan for success, they protect it. At Set for Life Insurance, they believe financial security isn't a luxury, it's a necessity. True own occupation disability insurance ensures that no matter what happens, your future stays in your hands. Because protecting your income means protecting everything you've built. Visit drpodcastnetwork.co/setforlife today. Secure your future before life makes the choice for you.
All right, everybody, welcome back to another BS-free MD. And today we are diving into a topic that doesn't actually get probably enough attention. It is all about disability insurance. And if you rely on your income to pay the bills, which is pretty much all of us, then this is something you need to understand. Most people don't really think about insurance until they need it, and then it's too late. So to help us unpack all of this, we're excited to welcome back Jamie Fleischner, founder and president of Set for Life Insurance, and also a proud sponsor of BS Free MD. And we've had Jamie on before and love what she's doing. And we really only like to bring on guests that we trust and believe in, and Jamie's one of those people. And she's been in the insurance business and industry for over 30 years and helping physicians and other professionals protect their income and financial future. So while Set for Life is known for working with doctors, they also help attorneys, business owners, and other high-income professionals get the right disability and insurance coverage. So full disclosure, while Set for Life Insurance sponsors this show, Jamie's here for as an independent expert. She's not a financial planner or investment advisor, and her specialty is helping people find the right insurance coverage. So as always, we encourage listeners to do their own due diligence, their own research, and consult with their own financial professionals before making any big decisions. So with that said, let's jump into what you need to know about disability insurance, why it's not just for the worst case scenarios, and how it can actually give you more freedom and peace of mind in your career. So welcome back, Jamie. Nice to have you.
Thanks for having me.
You bet. So let's see, last time, as I remember correctly, we got into like all the basics of disability insurance for physicians, and we want to like kind of widen this to include everybody a little bit, not just a physician issue, because it's not. So anyone who relies on their paycheck to pay the bills, I guess, unless you're Paris Hilton on a trust fund or something.
Well, she relies on something else to pay the bills.
Yeah, stop.
So
okay.
We'll just leave it at that.
So let's start with just the basics. What is disability insurance exactly? Why should people care about it?
So disability insurance insures your income. So people insure everything, their house, their auto, all of those are sort of automatic, but a lot of people overlook their biggest asset, which is their ability to produce an income. So all your decisions that you make financially are reliant on the fact that you're bringing home an income. So if something happens and you become sick or injured and you can't produce that income, it needs to be insured. So it's one of the riskiest types of things that can happen. There's so many things that can happen which would keep you from working, but it's also so overlooked. A lot of people just assume, oh, my employer will take care of it, or it won't really happen to me, or, I can still sort of work if something bad happens. So it's actually really important. And like you said, there are some people who may not need it. If you're Paris Hilton and you're completely financially independent, and you're not relying on an income, you probably don't need it. But if you are relying on an income and you don't have enough assets to cover all your bills, if something does happen, you want to make sure that you're properly insured.
Okay, so yeah, thinking about that, I mean, obviously people think, oh, great, if I have a major accident, everybody thinks about life insurance, because if you die, then there's nothing at all. But they don't really think about disability as much. And so let's talk about the importance of that, and why if I remember correctly, disability is more likely to take someone out really than a full death in their lifetime,
how many
well
more
as,
times likely?
Yeah, right.
Like,
as well as who should actually have disability insurance? What does it cover?
Well, so, there's 100% chance eventually everyone's going to die. So there is that for life insurance.
Right.
But if you're looking at it during your earning years, before the age of 65, there's about a 1 in 4 chance that at some point you're going to be too sick or injured to work for an extended period of time. So the risk is actually pretty high.
1 in 4.
The risk of dying between that time is less. That's why the life insurance is relatively less expensive. And so it is actually relatively high. Now, again, it can range anything from getting injured skiing, blowing out your knee and you need surgery and maybe you can't come back at full capacity right away, to getting cancer, to having a mental illness. There's a really wide range of things that can happen that can keep you from being able to work.
1 in 4.
Yeah, no, that's staggering when you think of that.
So is that now, is that specific to just all across all disabilities? Is that short term? Is that long term, or both? Or
it's actually across all disabilities. So,
okay.
Obviously, shorter term is more likely to happen. You might be out
Right.
for 3 months, 6 months with a torn knee. Something more permanent is less likely to happen, but it can happen. Something where you have a head injury and you can't work, or you have a brain tumor and you can't work. And it also depends on too the type of work that you're doing. So like, again, we work with a lot of physicians. I just had a surgeon recently have a traumatic eye injury and lost his eye. He can't do surgery because he has no depth perception. He has a policy that's own occupation. So if he can't do surgery, he's going to get paid, even if he can do consulting work or research, or maybe go see patients or do something that doesn't require depth perception. He's still going to be able to receive his benefits. Now, if he was an attorney, he can maybe still do his work without one eye. So it depends on how risky your work is and what you need to be able to do that work.
Yeah, that's a really good point, because the mistake that we made. So as we were talking before we hit record, I had these incredibly, probably bad avocations. Everything was high risk sports, motorcycles, skydiving, skiing, et cetera, et cetera. So my solution to the problem was to use my employer disability insurance, which we can get into why that's not necessarily the best idea, and to make sure that I had side gigs that were administrative in nature, so I could literally do them from a wheelchair. I wouldn't have to, because at this point early in my career, I was delivering babies. I was doing tons of manual where I needed not just my brain, but my hands. And so, part of this discussion is don't do what we did, because we could have, so much earlier, before I, had the time and money to do these sports, we could have insured ourselves for our own occupation as residents, which I think, you could talk about that. It's kind of a no-brainer. It's like you got to front load a lot of your financial planning to the very beginning of your career. You're going to graduate with $300,000 in debt, which I think is the average for most physicians. You have a brain full of knowledge, which is going to earn you millions of dollars, but yet we don't want to insure absolutely the greatest asset we have. Like if you had a $15 million house, would you want to insure it? Of course. So talk about, when to get it, because I think that's
So you bring up a good point. So the ideal time to get a policy is early in your career. And if you're a physician during residency, you're young, you're healthy, and you can qualify for the benefits. And then once you get the policy, you can increase down the road. If your health has changed, you've taken up avocations, anything else, the only thing they'll ask you in the future is financial, and you get discounts during residency. So like you mentioned, you do all these avocations. We have a lot of clients that do that. If you get your policy, everything is based on where you are at the time of application. So if you buy your policy during residency and you have no time to be doing any of these avocations, you can get a policy and all of that's covered. Then you complete your residency and you go and you do skydiving and ice climbing and all of these different things, and something happens, you're going to be covered.
Wow.
If you wait to get a policy and you're doing all those avocations and you apply, they're going to say, we're not covering rock climbing. We're not going to cover skydiving and all of these different things. So if a claim happens during that, it's not going to be covered. So it is important to get it. Also, when you buy your policy, your rate is locked in at the age that you are when you buy the policy. So obviously, the younger you are, the less expensive it's going to be. If you wait until your 40s and 50s to get a policy, it becomes very expensive to get that policy. Also, when you're younger, like you mentioned, you have a lot of debt. You have a wider period of time that you're vulnerable when something can happen that you need to protect. So ideally, the best time to get a policy was when you're younger, you're healthy, and you can qualify for it. You kind of set it and then later just adjust it accordingly as your career goes on.
I'm so blown away by the fact that, okay, so it's locked in at the age that you buy the policy, just similar to with the life insurance policy. And when we got those when you were young, and actually when we started to have kids. Why did nobody ever talk about disability insurance back then? Or is this like a new trend now? Or people starting to wake up? Or like, what the heck? How come?
I think I've been talking to residents about it for 30 years. I think people are talking about it. I just think that when you're in residency, you're so focused on just your day-to-day and getting stuff done. You just don't want to think about it. It just seems, oh, I can put this off. I don't have to worry about it. Or won't my employer just take care of this for me? Why do I have to go out and take care of this? I work at a big hospital. I don't have to worry about this. So I think a lot of people make some of those assumptions. But it's really, really critical to get it early on.
Well, I want to segue into own occupation,
about the difference
because
between employer provided versus.
Yeah, let's get into that. But it's fascinating because if you look at who are the most highly compensated people in medicine, and we know medicine, so we'll talk about that. They're often surgeons, so they have to have eyes, they have to have a brain, unless they're ortho. Sorry, I didn't say that. And they have to have, functional hands. So this is a very niche down, highly specialized, highly compensated set of skills that require essentially your entire body. I mean, you can't be an orthopedic surgeon with one leg because you're standing for hours at a time. And so it becomes so critical to not just get insurance to cover, a wide variety of things that can happen to you, which disability insurance does, but to cover the exact specific job you do. Because if you've spent, 10 years in your specialty, subspecialty, and now you're the greatest, shoulder surgeon in the entire country, and you lose, like you said, you lose an eye, you're not going to want to go back and, be a primary care doctor or a pediatrician. I mean, that's another residency. It doesn't work that way. So tell us the difference between most of the policies we get when we sign up for benefits and own occupation.
So there's a big difference between the group policy and the individual policy. A group policy is just sort of a general policy. And the reason it is because they can't individually select who they're getting. They can't say, this guy does all those activities, he's high risk. This guy doesn't, we want him. They have to cover everybody. So as a result, they can't offer as comprehensive a coverage. So a group policy typically says if you're totally disabled, not working, we'll give you 60% of your income up to $10,000 or $15,000, and that's taxable. So you have to be totally disabled, not working. So again, let's take the example of my guy with, the surgeon who lost his eye. He's totally disabled. He can't work as a surgeon. However, if he, let's say he has a group policy, it's going to pay him. If he does decide to maybe do some telemedicine or some research or anything else, they're going to say, hey, we don't have to pay you because you're earning an income doing something else. So that's not going to pay. The other thing is there's a maximum amount they're going to pay the group policy, again, up to $10,000 or $15,000. The employer's paying the premium. That's taxable. So even if you think, oh, I'm going to get $15,000, that nets out to $10,000 or maybe less, depending on where you're living and what your tax bracket is. So there's a huge gap between what the group can provide and what you're used to taking home. That said, then there's also own occupation disability insurance. And this is the most important part of a policy. So if you take one thing from today and you think, what do I need to have on my individual policy or on any policy? It's own occupation. And so what that says, if you're sick or injured and you can't do your own occupation, and it's whatever specialty you're doing at the time of claim. So if you buy your policy during medical school and you don't even have a declared specialty, and 10 years later you go on claim as a surgeon, it'll cover you in that capacity. But what own occupation says is if you can't do your medical specialty, we're going to pay you regardless of what you earn elsewhere. So the same client, he lost an eye, he can't do surgery. If he decides to do research or teach, or maybe he does TED Talks and he makes, a huge living doing that, he's still getting paid his benefit. There's no offset on his benefit. I actually have had clients retrain. They say, early on they have an injury or something happens to their vision. They retrain, they do psychiatry, they go on and have a whole practice. They're still getting paid that benefit because they can't do surgery. So that's really important. You don't want an insurance company coming back and saying, hey, we think you can do this, that, or the other thing. We don't have to pay your claim.
And how long does that benefit last? Usually
all the way until age 65 or however long you have the policy for, most to age 65 or age 67. So it's that whole period of time.
Wow. So can we expand it a little bit and talk about outside of, say, physician groups, like who would be a high risk, not a high risk, but what kind of profession outside of medicine that we're talking about would be a high risk profession and need something like own occupation disability insurance?
So a lot of people just assume, again, the surgeon is like the easy example. Of course, you need both eyes or you need your hands, and it's really high risk and it's very physical. But I just had a claim on a client of mine who works on Wall Street, sits all day on his computer, analyzing markets and whatever. He has glioblastoma. He has a brain tumor. And so he is totally out. He cannot do his work. He's had the surgery. He's had, they've done all of this stuff. He's going through all his treatment. Not sure if he's even going to be able to come back to work. They're doing all kinds of testing. They don't know what his capacity is going to be. So somebody like that, you'd think, like you had mentioned, if I could do administrative work sitting in a wheelchair, I'm going to be okay. But that's somebody who uses his brain. And if something happens, and you would think, oh, well, he's low risk, he sits at his desk all day, as most people do, attorneys, accountants, consultants, software engineers. So many people are in a similar position to him. And, he's lost some abilities cognitively. He can't do his work. Now, he has an individual policy and a group policy. Let's say he does go back to work, but on a lesser capacity because maybe he just can't do quite as much. His group policy immediately won't pay. If he's able to work even one day a week or at all, he's going to lose that group benefit. The own occupation policy will continue to pay if he pivots and is able to do something else. So, but that's something like a lot of people just think, oh, I don't do a lot of physical work. Nothing's going to happen to me. Well, news for you, it can. So.
What about less traditional jobs? So now we're kind of entering this gig economy where people work from home and they're content creators or they're Substack writers or whatever the case may be. Can you insure those kind of jobs as well?
Those are a little bit harder. So if you just start something, you need to at least show 2 years of an income pattern. So let's say you start your own gig work and you're creating content, or you're consulting, or you're just doing kind of gig work. You can insure those people, but they just need to show a pattern of work before they get a policy. So you can't just immediately go out and say, oh, I need 10,000 a month if you haven't been able to prove that you've been earning that. The same goes even for if you're doing locum work, or which is sort of gig work, or you're doing work that's not on a salary, or you're starting your own practice, whether it's in medicine or in law or anything else. You do have to show an income pattern. But even then, yeah, you can go out and get a policy and certainly cover that.
That's great to know, because I think of some friends of ours. You have these younger people that have been really successful content creators. So they may have 5 or 10 years of receipts of actually doing really well, but they're still young. They're still, in their late 20s, early 30s. And I was like, wow, this is a no-brainer. If you have shown this income, you can at least insure up to what you have, been producing for the last several years. Because I would assume for some people, they go, which is what I did. I go, well, I'm covered by my employer, I'm fine. And then you think about it. And the other thing that I talked myself out of getting more disability insurance was I was scared I was going to be overinsured, so I was going to be worth more disabled than not. And that if I got a different policy outside of my employers, that maybe neither of them would cover me.
So that actually, there's a stopgap for that. So if you have a group and you go out and apply for an individual policy, they have what are called income and participation limits. So you can't overinsure. There's only a certain amount you can actually go by. They're going to say, okay, you're making X amount, you have this much for your group, we can only supplement this amount. So because they don't want you to overinsure. The only time that it ends up being overinsured, sometimes people insure their full amount when they have that income, and then maybe they go to part-time work, or maybe they go and started their own practice and they're not earning anything. If they continue paying the premiums, it would cover. But you can't just say, "Ooh, I want to go out and buy as much as I can, so I'm worth more disabled." They're not going to let you do that. There's a gap. There's a limit on how much you can buy.
So when do you need a second look at what your insurance is? Like, is like, for instance, when you go part-time, or you change, work hours, get a promotion. What happens if
I think it's important to just reevaluate your insurance anytime you have any kind of life change, especially if you change your job. You want to take a look at what benefits did you lose or gain, or your income changed. How did that impact? That's a big time that you need to change. If you get married, if you have kids, you get divorced, you have a child, adopt a child, any kind of life event is going to impact your finances. Anytime there's some kind of impact on your finances, you need to evaluate and make sure you're properly covered. Because a lot of people get a policy during residency and they just forget about it. 10 years later, all of a sudden they go on claim and they say, oh my God, my policy is not even enough to cover my mortgage. I never updated it. So it's really important that you keep it updated. On the flip side, it's also important as you pay down your debt, and maybe your kids are out of the house, and you've accumulated a lot of assets. You can also start to trim your policy. Maybe you don't need as much anymore. Maybe you don't need as high premiums. Maybe you only need a 5-year benefit. Maybe you don't need as much benefit. Maybe you don't need an inflation rider. You can start trimming. I'm doing that with a lot of my clients that are now in their 50s. They just kind of want to get to the finish line. They're not ready to drop their policy because maybe now they've have back pain, or they've been diagnosed with something, or they still are relying on their income just to a lesser degree. You can also start to trim the policy. So early on, you set the stage, you build it up when you're really in your peak working years, and then you can also start to reduce the policy as well.
So tell us about when you're going out to shop for a policy. Obviously, they should all go to you, and you're going to set them up well. But are there key points that people need to look at? Because I'm sure these aren't all created equal. Are there any kind of points for shopping for coverage that you need to look for?
So I think one of the important things is, if think about who you're working with, there's agents and there's brokers. So an agent is actually employed by an insurance company, and so they have incentives to only show that company. and it may or may not be the right fit. So when people come to us, we're independent brokers. We don't work for the insurance companies. So we shop it around. There are really only 5 major companies left that have the true and occupation types of insurance. And so what we do is when people come to us, we shop it around and try and do a side-by-side comparison. So what might be right for one person might be totally different for somebody else, depending on the criteria, because they look, gender is a big thing. Women pay more than men do. Age, geography, what's priced in California is going to be different than Florida, occupation and income. So we look at all of those different factors. The policies themselves are really not that different. If somebody tells you this one's the best, this one's the worst, there's a range, but it's really not that big of a difference. So a lot of it does come down to premium. You don't want to overspend on this insurance or any insurance for that matter. So you want to just look at all of that. So when our clients come to us, we really shop it around. We also might make sure if there's discounts available, we show that. And then we also ask them, what are their priorities? Maybe they just want basic coverage. Maybe they want comprehensive coverage. Maybe there's 2 people in the house working. They want to just each insure half their incomes because there's 2 of them. Maybe there's somebody who travels a lot and wants to make sure that foreign travel is covered. So there's sometimes certain circumstances. Also, some people, if they have health issues, some companies might look more favorably at that than other ones during underwriting. So that's why it gets a little bit complicated. So when people come to us, we ask a lot of questions to determine what's going to be the right fit for them.
I love the brokerage idea, because that's exactly what it is. You're trying to find the right fit, because what all of this is just risk mitigation. You have a good career, you have a great potential earning. How are you going to protect yourself and your family going forward? I mean, that's why you put a certain percentage of your income away in for investments, and a certain for life insurance, et cetera, et cetera. And this is just one of those pieces, and it's going to be different, which is where a broker comes in. It's going to be different for every single person.
Exactly. And again, sometimes people don't want to cover the full risk or the full amount, or they only have a certain amount of a budget. So again, you really want to look at that. And the same goes for all insurance, or for any time you're buying anything financially. I mean, I have clients, they come out of residency and somebody tells them, oh, you qualify for $1 million mortgage. Well, that doesn't mean that you need to go and take out $1 million mortgage. Right. If you're able, think about what you really need to have and prioritize, and don't overspend if you can avoid that.
And I'm assuming, early on, so in residency, early career, someone might not be working with a financial planner, or they might if they're smart enough to do that. But I'm thinking as time goes on, or someone's deep into their career, has a financial advisor, or they're at that point, they're going to hopefully get some good advice from them as well. It's like, okay, this is how much coverage you should have, et cetera. Do you ever work directly with people's financial advisors as well, or is it mostly just kind of what they're suggesting to your
Sometimes,
clients?
a lot of times the financial advisor will come to us and say, we need to see a copy of the policy. We want to make sure it has this or that on there, or we're telling them they need to get more. We definitely work alongside with them. So but hopefully most of financial advisors do advise people to cover their income. We've seen some that don't. So it's really important that that's just lays the foundation for their financial planning.
Yeah, no kidding. So can you give us some real life examples? This might not be nice stuff to talk about when someone's going out on disability, but of scenarios where if you have any where someone wasn't covered, but also people that are unexpected things that come up in careers. You talked about already about someone losing their eye, can't do surgery. Any other kind of examples to show people how surprises can happen?
So one of the examples that I have is a really long-term client of mine, another orthopedic surgeon actually, but she had been a client of mine she bought her policy during residency, and about 15, 20 years later, she called me, and she was diagnosed with rheumatoid arthritis, and she had had it for a while. And she was really trying to just ignore the symptoms and work as much as she could. And it was really kind of a progressive disease. And she didn't really realize that as time went on, she had to really start cutting back. And one day she woke up, went to tie her shoes, and just couldn't get up anymore. And so she was completely out. And it was devastating because her work was really her life. She didn't have children, and this was this was everything to her. And so that's somebody, it really kind of hit home because her lifeblood was her work. And so she never thought anything would keep her from doing it. But it also illustrates the fact that she didn't realize that she could have filed a claim earlier on, because one of the things in a policy to have is what's called the residual or partial disability rider. So you don't have to be totally disabled. Most people think it's an all or nothing. You lose the eye, oh God, I can't do surgery. But she was gradually losing the ability to do surgery over time. And I think it happened slowly to her that she kind of ignored it. And so we were able to go back, and I was able to help her in the claims process. Once she had a 15% or more loss of income, they start paying that proportion of the claim. And so we were able to go back from the date of diagnosis on a month-to-month basis to see what that loss of income was. And once she hit 75% loss, she was totally disabled. So there was a lot of back claim over the course of like 2 years that she was able to get. But she's really, really grateful. And she's trying to do some research and some consulting and whatever she can do, but she's completely out. She's not going to be able to go back, and she's in her 40s. So she's going to be on claim for the next 20 years. So.
Wow.
Yeah.
What happens if you get you are a resident, and some of these residencies, especially with fellowships, can be, almost a decade, and you were disabled during residency.
That happened.
That has happened to us before. So during residency, you can actually sort of overinsure. So some residency programs actually do provide some group policies. Again, it'll cover you if you're totally disabled. But during residency, you can actually get $5,000 a month benefit, which is tax-free. So a lot of people get that amount, which is more than a lot of their take-home pay, what they're getting, plus the group. So during residency, they are actually kind of overinsured. You can overinsure yourself regardless of your income. And a lot of people like to do that, just knowing if something does happen during residency, they're still on the hook for all of those loans and bills and everything else. So yeah, they're able to do that.
Yeah, because things can happen. I mean, absolutely. Even when you're young, not just as we get older. And yeah, that's a good point, because you never you forget about that. Oh, all the loans and all the things you're still on the hook for. If you can't complete your training, someone's got to pay it. So
yeah.
Well, we had
loans
a friend
don't go away. Yeah.
Right.
Yeah, we had a friend that happened to. I mean, last year, I think 3rd or 4th year of residency, he was catastrophic. I mean, he was paralyzed.
Oh gosh.
And you're
Terrible.
like, what do you do? I mean, that was an accident where there was, a claim and whatnot. So he was able to retrain, and he had financial resources from the accident. But at the same time, you think, what if you fell down your own stairs or something like that? I mean, weird, random stuff happens, and you're 2 or 3 years into a residency that's going to pay you very well, and you're stuck with $300,000 of debt and nothing to
mention, I mean, when you're disabled like that too, you're also doing a lot of rehab, and you're, the toll it takes on yourself, your family, the mental health toll it takes on you. I mean, there's a lot of other factors that go into that. So, and it can't be a fluke. I had an OBGYN call me a few months ago. She was washing dishes, slipped. She was wearing socks and ripped off one of her fingers. And that's it. Can't do OBGYN. I mean, it's like something. And she was like, I'm so embarrassed. I'm like, it's okay. These things happen. You just, it's usually something silly like that. It's not always a major car accident or something. A lot of times it is just something like that can happen. And we are seeing a lot of autoimmune types of claims and a lot of cancer types of claims, and those types of things can happen. But again, the other thing that a lot of people don't realize too, again, like I said, the partial disability, I've had people have severe migraines and they can't work at the same capacity. So a group policy won't pay that because you're still working, but an individual policy would. And if it could be really limiting, if there's, 2-3 days a week, you can't go in because you've got these severe migraines, that's really debilitating.
Yeah, let's talk about that really briefly, because I've heard mixed things on that. I was actually one of those people that, throughout my lifetime, till menopause, and a miracle happened, but severe migraines from childhood just was one of those things where I would sometimes miss work, find some ways to push through it, had a really good support system. But how I've heard mixed reviews, because where we lived in Oregon, I was told that you could not have disability coverage for migraine, and it really just depended on the state. So does that vary state by state for some of these things?
No, so it doesn't vary state by state. It depends on when you apply. If you're currently when you apply for coverage, if you're currently being treated for migraines, they're probably going to exclude that condition.
Right.
If you get the policy prior to having the migraines,
Okay.
it's going to cover that. Now, one thing that I did want to mention that's new since we talked last, that we've been doing a lot of work with in residency, is we now have policies at a lot of hospitals around the country called guaranteed standard issue, which allows residents to get a policy with no medical questions asked. So which is a really big deal, because about 1 in 3 people who applied for coverage have some kind of exclusion, whether it's migraines, asthma, back, mental health, something. So if you're able to get a policy like that, you don't even have to disclose it. They don't even need to know it. And you would have full coverage for the migraines, the back, or any of those types of things. So it's a really big deal.
Wow.
Yeah, that's a really big deal.
Is that like a new thing that's been?
It's relatively new. So we have it, again, only select brokers have access to this. And it's only at some select hospitals. I think we have it at about 60 hospitals around the country. So residents should first check and see if they have that available. Because even if you are healthy, being able to just bypass that is great, being able to get that policy. And there are some disclaimers. So if you go and apply somewhere and you get an exclusion for migraines, and then you say, oh, wait, I heard we have a GSI at the hospital, I'm going to apply. They're going to go in through the system and say, wait, you applied elsewhere and got an exclusion. You're voided. You can't get this. So if you do have a GSI at the hospital, always get that first, get that policy, have everything covered. Then if you subsequently want to go and buy additional coverage elsewhere, you can go and do that. So it's a really big deal, and it's becoming really popular. But we've been able to help a lot of people with those types of situations get coverage.
Well, it
full
sounds
coverage.
that sounds like a total no-brainer. Because
Yeah. It's a game changer. Yeah, it's a big deal.
So do you, can we separate? So are these things mostly we're talking about, these are kind of I'm thinking mostly permanent type disabilities, but can you separate the difference for us between the temporary versus kind of off and on, I guess you call full disability? Because I'm thinking of, say, it's not something that you're covering where it is you have a hip replacement or like an ACL tear and you're out for 12 weeks and then back. There's different policies for that.
Yeah. So most individual policies have a 90-day waiting period. So they're really intended to be for more long-term, but those can still be temporary too. Like we've had people go through cancer treatment for 2 years and then they're back working fully, or, something of that nature. In a really short-term type of disability, like, you have a knee surgery, you're out for 3 to 6 weeks, that typically is covered through work. If you have a short-term policy through work, when you sign up for benefits, if short-term is available, you're always better off getting that through work. You can go buy that individually, but it's really, really expensive, and they usually don't cover anything for like 2 years. So I have a lot of people who come to us and say, I want to get a policy, I want to get pregnant soon, and I want to cover, maternity leave, or if I'm out. And I'm thinking, I have to tell them, you're better off signing up for that through work, or just putting the money into savings, because if you were to go buy a short-term disability policy, you'd have to wait 2 years to get pregnant, and then it may not even cover that. So
got it. Okay.
And on that note, individual policies do cover pregnancy, but it has to be medically necessary. So it's not like, oh, I had my baby, I'm going to take some time off. It has to be medically necessary, like bed rest or complications at delivery. But that's covered just like any other type of claim.
Yeah, no, and that makes sense. I mean, because there's lots of medical complications of pregnancy where you have to be on absolute bed rest, and I mean, you are totally disabled.
Yeah, you can't work at all. Absolutely.
So.
Good point. Okay, so anything else we're missing in all of that?
I just think, kind of just summarize, I think it's important to look into this when you're young and you're healthy, when you feel invincible, because that's usually when people don't think anything's going to happen, but it's the ideal time to get a policy when you're young, you're healthy, you get a policy, you lock it in, and you don't have to worry. So if other types of health issues do come up later on, you develop migraines, you develop back pain, and you take up these avocations, all of that kind of stuff. It's really important to just get that early on. And then it's also important to make sure you shop it around, that you're not just given one quote and this is the best and this is the only. You want to make sure, how does this compare? Is this the best fit for you? And then over time, it's also important to review as your life changes. So as your career ramps up, you want to adjust it. As things plateau, and then as things kind of tamp down, you also want to adjust it accordingly.
Perfect points. All right. So I guess, is there any, I'm going to do this kind of, I thought of some other questions here that we had written down. Is there any big mistakes that we haven't talked about then that people make when buying disability insurance, other than like what you said, the shopping around, or just sticking with, I guess the biggest one might be just sticking with your primary employer and using that as your only coverage. Is that right?
I think that's probably the biggest mistake, because if you ever need to leave your employer, that coverage doesn't go with you. Your individual policy is portable, so that goes with you throughout your career. If you go on claim, the individual policy always pays first before the group. So I do think the biggest mistake is just assuming, oh, my employer will take care of me. I think what a lot of people don't realize is if you do go on claim, then what tends to happen, like this client of mine that I was telling you about with the brain tumor, he's working on Wall Street. Once he was on claim, they changed his employment status. So he's no longer employed by the company. So that changed his health insurance. It changed his life insurance. It changed a lot of other things in his, and then if, it can really have an impact on that. So it's great to have good employee benefits, but just think of that as the foundation, not as everything to you. So I think that's the biggest mistake.
I love that point, and I love the idea of portability. I mean, what's the average lifespan of a physician job in one place? It's like 4 years or something like that. People move around a lot now. And this whole concept I love, just from a philosophical perspective, of taking care of yourself. This idea that you're going to go and your employer is going to take care of you. We have in our own lives experienced how that doesn't work. And we've talked to numerous physicians with our podcast where it's like, we thought it was just us. No, it's everybody. I mean,
yes.
When you're an employee, you are there to make money for that company. It is not a family. They're not there to coddle you and take care of you and all of the, you're there to make them money. That's why you have employees. And it's important. So take care of yourself first. It's who's that? David Chilton, the wealthy barber. His financial planning. Pay yourself first. In other words, invest first. Get a will. Get life insurance. And I would add the fourth, leg to the chair is get disability insurance, because especially if you're a physician, you have a very, very narrow skill set that pays well, but it's not like I can just go and be a marketing guy after practicing medicine for 33 years. I mean, I really know how to do one thing really well.
And with a high sort of debt to income ratio to start off with. It's like that curve.
Yeah, you're very, very specialized. And I think so many people are very specialized. And even if you become a specialist in one corner of medicine, you may not even be able to pivot to another. So very specialized. And I think going along your point is, I also tell people, don't rely on the government to take care of you either, or your family or your extended family to take care of you. I mean, some people are like, oh, my parents will take care. Do you want that if something happens? I mean,
no.
Maybe your spouse, I get, but you want to rely on, others to take care of you if something happens. You really need to take self-responsibility and take care of your financial household.
Yeah, I couldn't say it better.
No kidding.
Outstanding.
So, all right, where do people find you as far as signing up for disability insurance, getting some quotes and looking at options? And just tell us a little bit specifically, is it physician only that you're covering, or all health?
No, we help all different people. I mean, we have a lot of physicians. That's probably about 80% of our practice, but we work with all different professionals. And so the best way to reach us is setforlifeinsurance.com, SETFORLIFE, insurance, all spelled out, .com. We have a lot of information on there. You can request a quote on there. You can get information on there. I did want to mention /GSI. So if you are listening and you're wondering if you have that guaranteed standard issue at your hospital, if you're a resident, go to that page. We have links to some of the different hospitals. We don't have all of them listed on there. You can always just contact us first and find out if you have one of those at your hospital. I think it's really important for residents that are in the process of getting insurance first seeing if they have that, because again, if they apply elsewhere and have it rated or excluded and they later find out they had it, they're void. So it's really important for them too, when shopping around, to see if that's available. And if somebody already has a policy and they've had it for years and they haven't reviewed it, I'm happy to review it too and say, this is a good policy. Do you need to make any modifications? Do you need any changes? Is somebody servicing you? Did you buy a policy from somebody that's no longer in the business or you haven't heard from in 10, 15 years? Right. So I don't typically like to replace other people's policies. But there are sometimes circumstances where there needs to be adjustments or somebody just needs to take care of these people. We do keep up with our clients over time to make sure everything is in order. So if your agent or broker's not staying in touch with you and managing your policy, I'm happy to take a look at that as well.
Perfect. We will put the link in the show notes. And thanks again for explaining all the nuances of this, because I don't know, even our brains, I mean, it's something that we weren't even really offered until were employed. And that was, 30 years ago. We're like, oh, disability coverage by our employer. This is wonderful. They're taking care of us. And that was the end of that. So great points. Hopefully people's eyes and ears are now more in tune to this stuff than ours were. So for those interested in connecting with Jamie and her team, remember, you can go to actually drpodcastnetwork.com/set4life or her website, which we also put the link in, and they will get you set up. And whether you're a physician, entrepreneur, other professional, someone who relies on your income is the main thing, then these are some things you can't ignore. So if you found this helpful, please share it with a friend and subscribe for more real, unfiltered conversations about medicine, money, and protecting what matters most, your family and your health. So we'll see you all next time on BS Free MD. Thanks again, Jamie, for being here. It was great to have you
Thanks
again.
for having me.
It's no secret that medicine is a bit uptight. That's why Tim and I created BS Free MD, to mix things up a little and have fun in the process. Besides, we are having these exact same discussions all the time, so we thought we might as well invite everyone to the party. If you really like us, you can get plenty more and maybe see one of Tim's cool tattoos on our Instagram or Facebook pages at BS Free MD. See you next time.
While we try to keep BS Free MD as raw and real as possible, we can't be held responsible for any medical decisions or discussions had as a result of what you've heard on the show. We know, bummer. But the truth is, we really do care about your questions. So feel free to reach out to us by email at doc@bsfreemd.com.